Hello guys, welcome back. It's Tuesday. It's a sunny day outside, 26 degrees in Sydney. Can you believe that? The summer wasn't a period on December, it wasn't a period on January, and it comes to be a week in February. So we have like 35, 42, 36 degrees every single day here in Sydney. So it's a beautiful day to be out there on the ocean, giving a swim, a splash. But we are here to give you a big update on the market. So brace yourself up, get your notebook, your popcorn, because the video is gonna start soon. Before we go any further, guys, please give us a thumbs up on this video. It makes so much, zero effort for you guys to literally appreciate a little bit of what we're doing, and YouTube will recognize this as, okay, those guys are doing really great content. Let me pass it on to everyone else, so everyone can learn as well. And subscribe to the channel, and make sure that you are on the Telegram channel as well, because today from 5 to 6 p.m. we're going to be having the webinar as usual. Now let's get into it, and I will be surely, all right, to make you a very nice trade in the end of the video. So stay with me until the end. Right, so as I told you yesterday, if you haven't watched the videos from yesterday, the weekend was a little bit crazy, and we had a lot of tariffs being imposed by Trump, and we still have some sort of tariffs being imposed, but that's not what we want to talk today. So we had the ECB being hawkish. I don't know if you guys remember, but last week I forgot to mention that, but I was reading through my notes today again, and I was like, okay, I didn't tell them this, but the ECB is being a little bit hawkish at the moment, that there is maybe a possibility of a hike in September this year. That's what they say, that's what Lagarde say, that there's maybe a possibility. I don't think it would, okay, because when we look at the prices for the consumer, the index is coming down, it's on the target for the central bank, but the tricky thing here is the underlying price, the underlying actual for the society. So if we go to the supermarket now, prices are so much expensive. I've talked about that already. 22%, 23, 25% expensive than it were before. And that's the inflation. That's the real inflation affecting on a daily basis. Different from the 2%. The 2% won't affect you on the inflation. That will affect on your interest rates on the mortgage. It's different, two different things. But the underlying prices are rising. And the central banks know, but they just don't want to talk about it, okay? Now, another point here is that I was having a talk to one of my friends yesterday on the gym, actually. He works for a big bank here in Australia, in Sydney. He works for the risk desk into that bank. And they are thinking that the RBA may not cut this month in February, okay? So if the RBA doesn't cut, Trump continues to impose tariffs, and as he say, he wants to impose on Europe now, 10% on Europe now. Most likely we still have a very weak Australian dollar. So I don't have two scenarios for Australian dollar, I only have one. Especially against the US dollar basket. It's short AUDUSD, okay? And that's the trade I would love to be sharing with everyone here. So my trade recommendation for the month of February is short AUDUSD. But remember, it's not a, you have to do this. It's just what I have into my portfolio, all right? So I'm looking to short AUDUSD. We had a huge gap on yesterday open, on Asia open. Let me get the prices back again. So right now we are trading at 0.62, literally 0.62. And we just closed it up the whole gap. Most likely what we're gonna see is a comeback to 0.60 or below 0.60, okay? All of these tariffs and everything is affecting China. And if it's affecting China, it's affecting Australia. And if it's affecting Australia, we're going to have the RBA being dovish, and once the RBA be dovish, the Australian dollar will be even more affected. Okay, so all of those things will make a very weak Australian dollar, and all the money will run to two things, maybe three, but most likely two: gold and US dollar. So US dollar will go up and gold will go up as well. We've seen a huge uptrend on gold. Gold is currently trading at $2,818. Most likely, if we have a comeback, we will see just a short-lived pullback to then continue to go higher. My target for gold this year is $3,000, okay? And I've mentioned that last year with Adrian as well from, I think he was, I forgot the institute that he's from, but he's a really big trader as well on gold. So yes, most likely we're going to be looking at gold at $3,000. So there's a pretty much more $200 for you to be catching the trend. Okay, I would wait for pullback, but if your strategy has an entry point at this price, go for it. Guys, I will be eagerly waiting for everyone from 5 to 6 p.m. today to be talking about a little bit more broader context on the market and what the tariffs then actually happened and what can possibly become, a problem for the US, because that is going to make a lot of inflation as well. So take action now and join us on the Telegram group. The link is on the description, and that's where you will find the link 5 p.m. exactly at 5 p.m. Sydney time. I will send the link in today and you can join. It's for free. We don't charge you anything. Guys, thank you so much. Don't forget, subscribe to the channel, give us a thumbs up and share this content with a friend, and I see you tomorrow. Bye bye.